Hello, hello, hello. Hope everybody has a great day. Hope I have a great day. So, namaskar, pranam, adab, salam, kirohal, kebonache. I just love doing this for some reason. Let's quickly jump into our Nifty and Bank Nifty analysis by black holes, since we don't want to be involved in a black hole. So, looking at our index, we have pretty positive signs. We've been having pretty positive signs since a while now. So I don't think anything has changed as of now. The difference remains constant, and we don't see too much of a hindrance in further going up unless and until something drastic happens over here. Uh, just to give you a slight indication, this gap was somewhere in the morning was around 100 points, 90 points, which has now been reduced to 60. In between, it was 40 and 50 as well. The Nifty gap is currently at around 43. Uh, I hope it's visible right now. Okay, restarting once again. Hello, everybody. Hello to myself. And let's jump into our daily analysis of our Nifty and Bank Nifty. Seems like, all right, welcome back to another day on 20th November 2025. We are back to looking at our indexes, our favorites, yen, silver, gold, all doing pretty well. Uh, Yen has clearly gone off the charts. If I must show you, yen was at 157.7 and it's come down to 157.3 right now. Tremendous move, I would say. Tremendous. This is surreal. Within a few days itself, you're getting a move of more than like a few percentages. And if you see through November, this was at 151 and it's gone up to 157. And let's check just before that when it was around, October lows of 146, to now we're looking at somewhere 137, and September low was 145. So from 145, the yen has been tattered, battered, and has been taken to 157.3. Not great signs at all. Not at all great signs, I would say, in my opinion. But then again, who are we? Because market's its own leader and it's doing tremendously well. The Nikkei was up. The Nikkei was up a lot today. Our index seems to be showing a lot of resilience over here. When you go to see Nifty, we have Nifty breaking and almost reaching an all-time high. Uh, Nifty, I think the all-time high was somewhere here. So we're back over here, and you can surely draw some horizontals and see if this can be a breakout, which can happen over here. 26,205. If it can go further up from here, uh, any of these moves are like insane, man. It's insane. Once again, there is nothing to see in Bank Nifty. Bank Nifty is looking supremely good. No problem. All option prices are holding up in time. Nifty doesn't seem to have any problem at all. The 36-point difference, but requirement is 42 and it's at 207. So clearly, we don't see much of a change here. The only change I would say is in USD JPY. Some strange things are also happening across the world. If people have really watched the King of Saudi Arabia going to the United States, it was one of the funniest incidents where our man is saying that, I'll invest a trillion into the country when Saudi's GDP is around 2 trillion, you can say. And when he is talking to the president, you'll see that he's saying, the president, you just keep asking for more and more every time. And that seems like the most hilarious thing. There's also another video which is circulating, which is of Jensen Huang, the guy who owns Nvidia, and Elon Musk of Tesla in Saudi Arabia. And the way Elon has said that, yeah, of course, they'll be making like 5,000 gigawatts, so 500 megawatts. Like, how does it matter? It's just going to be like gazillions and trillions and blah, blah, blah. So that really is something which is kind of become a joke even over there. Uh, Markets don't really react well to such kind of jokes, but you see, we are going way ahead of that. Nifty has already reached its all-time high once again, and Bank Nifty is breaking all highs every day. So Bank Nifty is at 59,365. Again, today was an all-time high day. We can shift to a daily chart and see this. So here we are, another all-time high, 59,371. Honestly, looks like it can go further more towards like 60, 61,000 to me. Uh, Here we have 45-point difference in Nifty, and Nifty has reached 26 to 12 to 10, and it's there at the same level, not much of a difference. So yeah, everything is pretty bullish here, very bullish. uh, what happened overnight is, what we should be checking out is that a Bank of Japan member, Junko Koeda, he publicly stated that the real interest rates in Japan are clearly low compared with other countries, and the Bank of Japan should continue normalizing policy by raising rates. And by raising rates, he means by raising rates continuously, not just a one time thing. In Japan, it's not a one time thing at all anymore. Japan is heading towards normalization. It's not going to be that same, how it used to be printing money in the past for America and giving them free money and creating the yen carry trade, which is over 20 trillion, but nobody has any exact value to it. So that has been covered by Reuters, and that was on 20th November. This article has been published. So the BOJ policymakers are calling for this rate hike. They say that the prices have been relatively strong, is what Koeda said, and they should proceed with normalizing interest rates. Uh, this guy Koeda, he's an academic who joined the central bank's board in March, and he will vote in favor of an interest rate increase if proposed by Governor Kazu Ueda in the coming months. So he says that corporate profits remain high in the country. The economy is resilient and prices have been relatively strong. Koeda said, adding that the recent surge in the food prices could affect inflation expectation. Also, as we are seeing in our USD JPY, when USD JPY is becoming like this, uh, there will be inflation in the country because currency is depreciating. The prices which people will be paying for this will be far more because it is a import oriented country, and that will cause further trouble. On the other hand, we are seeing our difference again at 50, 51, 52. Don't know where this can go to. 26 200 now, the difference of almost 60 at 26. uh, but nothing really terrible, because nothing wrong can happen right now. Everything is supremely bullish unless some overnight event happens and we see some tremendous downside. The overnight events could be some border tensions. It could be Japan coming up with a surprise rate hike. It could be Japan with a surprise US Treasury dump, and this is a little precarious even at all-time highs right now. The BOJ and the government, uh, including the finance minister Satsuki Katayama, held a meeting where they have emphasized monitoring markets with a strong sense of urgency. Uh, this is just their normal statement, which they say. I don't think so. They are going to do anything before the yen reaches 160, and the bond prices surge far lower and the yields go far higher. The 10, 20, 30, 40-year bonds are going off the charts. They're going bonkers. So uh, they're saying that they have to align on achieving stable inflation plus rising wages. But here there is some other problem. There are two major problems which are there, and the third one which has been created by the prime minister herself. The two major problems which are there in Japan are the bond crisis, and the second is the currency crisis. The bonds are going off the roof with the yields touching all-time high, which could trigger a severe yen carry trade, spin-off, and there could be a very, very big unwinding of the trade. And the second is your currency is getting weaker and weaker. The Japanese Bank of Japan and the finance ministry could see strong FX interventions which can come in. We don't know when. I don't think 157 is usually the level they would like to do it at. They would do it somewhere above 160 or even around 158 to 162 is where some alarm bells will start ringing from them. Because I feel is that they don't look at this in a manner where it's phased. They look at it at the rate at which this is going up. So say your pace of the depreciation is very high, and it causes a certain kind of a problem. Like one day the currency changes like 5 to 6% or more than that, then that is a problem for them. But if the currency is moving at point 4, point 3, point 2, point 1, point 5, they don't really care right now. So I think they're looking for some massive uh, depreciation which can kick in. Now, how it'll kick in, only they know, because they are the best at this game. I would say the game is far beyond our control, and it's best to not think about it in terms of like it's they are not doing it or something, like we are smarter than them. No, no, no. We are really not smarter than them. We are nothing but puppets in this entire game. and we are just observers of a regime which is plunging its country into uh, a complete chaos. So, keeping that in mind, I think these guys will do something, but when, how, we have no idea. um, from the bond market perspective, these JGB yields, especially on these long maturities of 20 to 40 years, are like, I can't even imagine. They're like 3.7 and all, on concerns of this large fiscal stimulus which is being planned by the prime minister, and the delayed rate hikes. So, as I mentioned, two problems are bonds and the currency, and Japan being a very, very crucial backbone to the entire world. They are the ones who are entering this, and they are the ones who are creating, going to be the front runner probably for this entire crisis to unfold. The key risks, are obviously, there are like three to four key risks and tensions which are there. One is your fiscal versus monetary mismatch. Uh, Second is yen being under pressure. Third is your uncertainty about your rate hikes. And fourth is the yield curve is steepening and funding risk. So, with the long, like when yield curve is steepening and funding risk, what I mean is like when the long dated JGB yields are rising sharply, domestic institutions like the insurers, pension funds, and foreign investors may start to pull back, and that raises stress in the bond market. And it could spill into global fixed income as well, which could again trigger multiple algo stop losses, leverage trades, can cause severe implications. Uh, Rate hike uncertainty, of course, we have no idea like what is happening. Uh, we have another member that which I mentioned, Mr. Koeda, who is now favoring a hike. The exact timings again are uncertain. Markets are split. Some believe they could raise in December. Other think delay is likely given weak growth and large stimulus focus. But I can assure you, what is certain is that it's going to be a surprise. There is going to be nothing else besides the surprise which will come in, and that would for sure lead to some kind of if everything is planned, the market will not react very badly. But when something is sudden, unplanned, is when the market creates jitters. So that is the big issue. Also, yen being under pressure is due to the fiscal concerns. uh, of course, everybody is fearing an intervention, but so far there has been no relief. And what I personally believe is that till 160 does not hit, we don't see any intervention, because this is what we saw in July of 2024 when they had to intervene and connect their currency from 160 by an immediate rate hike. So something like that is obviously possible here. And the fiscal and monetary mismatch, which was our first point. Uh, the prime minister, she set her eyes on some large fiscal stimulus, approximately 20-23 trillion yen. Numbers you'll never know because we are on the finance ministry guys of Japan. um, so when on one hand you're signaling a stimulus while the BOJ is signaling a tightening, that creates a lot of tension. It creates higher spending at low rates, which means like larger debt supply and more yield pressure. So we do have trouble. Now the implications for either today or say near term in all these, I'll highlight it one by one. For FX and yen, for sure we will expect further weakness in the yen unless there is some surprising intervention which happens. USD JPY is heading towards the 158 to 160 zone. We can clearly see that. In fact, when you sleep last night, it was at 156.5. When you wake up today, it's at 157.7. Abnormal. So 158 to 160 is a plausible area for them to intervene given the current momentum. That weak yen also increases their import costs, as I've mentioned. It makes sure that inflation becomes higher. And this may for sure push the Bank of Japan to act now, finally, after I don't know how many months of just delaying. It's like a spring. It's just been compressed. The moment I remove my hand, it's going to jump, and this is going to jump way beyond proportion. So I have, I mean, I can't even put my mind around it, like what can happen unless and until Japan behaves like the colonial era slaves of United States and continues to be in this zone, which I probably don't think they are going to be doing. But once again, they also have some kind of border tension which is going on. Chinese have not yet stopped their aggression against them. Now, in terms of bond, the yields again may continue to rise unless again we see steepening or some major intervention, which is again by Bank of Japan, and some aggressive signals by them. Uh, the only thing is the duration is getting punished here. The higher the duration, the worse it's performing. Uh, Equities and risk assets, these could face a lot of headwinds because weaker yen lowers the real returns for foreign investors, higher yields increase cost of capital, domestic sectors reliant on low interest rate, may suffer. So on the flip side, exporters benefit from weaker yen, could be a selective opportunity, but for how long? It's at the expense of your country. Uh, there is a carry spillover as Japan moves forward with a tighter policy or even just signals it. Global carry trades not may unwind but will surely unwind. And mind you, the carry trades are the backbone from which every emerging market is making money, and every emerging market is performing. Every emerging market is getting the money from, because these are the guys who are your kingpins of free money. So free money is what is needed for any market to run. And since Japan is trying to curtail that free money, we can see some kind of trouble brewing ahead. In terms of policies, if these guys appear a little misaligned, मतलब एक चाहता है कुछ और दूसरा चाहता है कुछ और, and by that I mean the ministries and the Bank of Japan, fiscal heavy and monetary tightening. That's a red flag for domestic stability. Markets hate policy uncertainty. Uh, Conversely, if they show coherence, then risk premium may come down. So, what to watch closely? I would say that continuously keep watching the statements coming in from Bank of Japan members, Bank of Japan governors, the prime ministers. Watch out for the China narrative, which has been said continuously, and follow the JGB auctions if happens, especially the long dated maturities. Weaker demand uh, or higher yields will raise a tremendous and a very loud booming sounding alarm. Uh, FX intervention can again be very, very sudden in the currency markets. And if there is a fiscal package, if that increases, if they go ahead and they say that we're going to be spending way more, how will you fund it? आपके पास दो ही ऑप्शन है. या तो you go ahead and you make sure that you sell your entire US treasuries at one go, instead of that 100-year timeline that you have. You dump it and you make sure that you get the money to do all of this. Or there'll be, you have to issue more bonds. But again, if when you issue more bonds and there are no takers, again it will build more pressure. So for them, the only way out right now, in my opinion, is go ahead with dumping US treasuries. There is no other way that you can do this probably. The wage and price data, honestly, it'll all go for a toss because how much ever they say the wage growth accelerating, with a depreciating currency, honestly, there's nothing going to be very safeguarded. You're going to be losing to inflation more than anything. And their target is 2%. We are way above 2%. They're just creating reasons every time they come for this policy meeting. Very, very, you know, cowardly of the Bank of Japan members to not take a strong stand and make sure that they go ahead with the hikes. Uh, if the US yields rise further, Japanese yield spreads widen, then again they add pressure to the yen and JGB. So, in my view, Japan is at a very, very pivotal juncture right now. The combination of, say, very large fiscal stimulus, weak yen, rising long-term yields, and Bank of Japan slowly shifting toward normalization means risk is skewed to the downside for domestic bonds and currency in the short term. For global investors, the Japanese risk is not just domestic. Given Japan's role in global fixed income and carry trades, uh, a sharper move could spill into global rates, FX, and equity flows. So, in one sentence, if I can say, uh, this looks like a market stress point. Japan really looks like a market stress point for 2025, 2026, rather than a stable, safe carry trade right now. So the years of your, free money, free carry trades will require a lot of pondering, a lot of awareness, red flags, and probably unwinding. If unwinding happens at a slow pace, we'll probably not see that much of an effect on emerging markets. But if it happens at a very fast pace, my God, Holy Mary, Jesus, this can be cut, cut, cut. So, going back to where we belong, uh, continuously seeing the yen come down, is there, I don't know if there's some intervention which is happening, but looks like a clear intervention which is taking place from 157.8 to 157.2. Now, if it's a breather, we don't know, but for sure, some problems are brewing. 26 to 50 again here. Silver is stable, gold is stable. Uh, the only trouble is this guy. Oil has come down because Trump has said that he's signing a whatever few point accord with Ukraine to end the war finally. So if a war is ending, clearly oil demand will go down. Now this seems to be increasing. It was at 10, now 20, then now 30. If it keeps widening, we will see some trouble. Over here, we have a difference of 37, which is still 50, so not that much. Nifty is pretty good. Uh, Also, just in right now, the news that Pakistan has extended NOTAM for Indian Airlines till December. The country saw major losses in the conflict after the Indian strikes. Again, on the domestic front in India, the Indian markets, uh, we have a very, very big issue right now of a surprise border tension, which we should not rule out. The problem with the human mind is that it is mostly in the situation of Raat Gai, Baat Gai, but if the other guys don't really look at it like that. They look at it from a much wider lens, which gives them an understanding of weight. Timing is very important, and I'm sure these guys will do something which is probably one of uh, the biggest steps ever taken towards India Pakistan scenario, because at the end of the day the aim is to end terrorism. India has been constantly saying it. Mr. Jaishankar, who went for the SEO summit to Russia, also met with his Russian counterparts, always stressed on this. And very surprisingly, on 17 November, a member of the Pakistani parliament has actually accepted it. that it was them that who has done this entire debauchery to our country. So whenever we see something like this, it should boil the blood of every Indian, and India should have a befitting response. And so, at any given point of time, if that actually takes place, uh, we could see a massive correction in our indexes as well. So, one should be prepared. One should have a diversified portfolio with cash, silver, gold, debt, and some defense stocks as well, because that is the need of the hour. And we need to be fully prepared for what's going to come our way, and make sure that we are safe. Being safe is important in terms of your monetary planning. Being safe is important in terms of your travel plans. Being safe in terms of global risks. Uh, in fact, in terms of global risk, China is one of the guys who are really like eyeing Taiwan at the moment. They've been doing that for a very long time, but we never know when that can happen. uh, it seems always uncertain that these kind of situations will not happen. But you see, we are nothing. We are always of a positive bent of mind. The world has different plans all the time. So going forward, just make sure you keep your capital safe, hedged, and enjoy your time investing, trading, finding new opportunities in the markets. According to me, great opportunities shall come in the space of agriculture, agrochem, anything related to agriculture will probably boom after probably if there is a correction. Right now, it doesn't look like there's a correction, but if there is, we could see a lot of inflows which can come into that sector. Agriculture will be a very, very key aspect for India going forward. We are an agrarian society, and we have a lot of agriculture, cultivable land which we can get. So make sure that you tread carefully, very carefully. All right. With that, I'll just take your leave. And with this, we'll see our Nifty touch an all time high today. Take care. Keep watching the yen. Don't get into any dens. Bye bye.